Every quarter, the most sophisticated investors in the world are required by law to show you exactly what they own. Berkshire Hathaway, Citadel, Bill Ackman. Every fund managing more than $100 million has to file a public disclosure with the SEC within 45 days of quarter end. It lists every stock they hold, every position size, every change from the prior quarter. It's called a 13F, and almost nobody reads it. Welcome back to the AI Portfolio. I'm your host, a CFA charter holder with years of professional market experience. This channel gives everyday investors the same tools and thinking that used to be reserved for Wall Street, free every week. Nothing here is financial advice. This is a research skill. Let's build it. Here's why this matters. Professional fund managers spend millions of dollars on research, analyst teams, and data infrastructure to build their portfolios. A 13F doesn't show you their private notes or their real-time trades. It's a 45-day lag, but it does show you their considered long-term positions, the names they chose to hold, the sizes they built, the quiet exits they didn't announce. That's a signal worth reading. Here's where to find them. Go to the SEC's EDGAR database at sec.gov and search for any fund manager by name. Look for filings of type 13F-HR. That's the quarterly holdings report. You can also use free sites like Whale Wisdom or 13F.info, which aggregate and compare filings across funds. Download the holdings table, paste it into Chat, GPT, or Claude, and you're ready. Prompt 1. The position change analysis. The most useful question isn't what a fund owns, it's what changed. A position they've held for 4 years tells you less than a new position they initiated last quarter, or a stock they quietly trimmed by 40%. Use this prompt. Here's a fund's 13F filing for this quarter and last quarter. Identify all new positions initiated this quarter. Identify all positions that were increased by more than 20%. Identify all positions that were reduced by more than 20% or fully exited. For each change, note the approximate dollar value and what percentage of the portfolio it represents. The exits are often the most important part. When a manager who's held a stock for 3 years sells the entire position in 1 quarter, they're not trimming. They've changed their thesis. AI surfaces every one of those moves in seconds. Prompt 2. The conviction analysis. Not all positions are equal. A fund might hold 40 stocks, but the top 5 positions often represent 60% of the portfolio. Those are the high conviction bets. The names the manager is actually willing to be wrong on. Use this prompt. Based on this 13F filing, rank the top 10 positions by portfolio weight. Identify the 3 names where the fund appears to have the highest conviction based on position size and consistency across quarters. Then identify any positions that look like small speculative bets under 1% of the portfolio versus the core holdings. This tells you where the manager's real money is. The small positions are interesting. The large, consistent positions are where they've done the deepest work. Prompt 3. The crowding detector. Here's where it gets powerful. When you run this analysis across multiple funds at the same time, you can identify which stocks are showing up everywhere, owned by 5, 10, 15 major funds simultaneously. That's called crowding. And crowding is a double-edged signal. On one hand, it means a lot of smart money agrees. On the other hand, if sentiment shifts, all those funds sell at the same time. Crowded trades unwind fast and hard. Use this prompt. Here are 13F filings from 3 different fund managers for the same quarter. Identify all stocks that appear in at least 2 of the 3 portfolios. For each overlapping name, note the combined approximate value across all 3 funds and flag whether each fund increased, held, or reduced the position this quarter. Which names look like high conviction consensus, picks versus names that multiple funds may be exiting simultaneously? That last question, simultaneous exits, is the early warning signal most retail investors never see coming. Those are your 3 prompts: position change analysis, conviction mapping, and crowding detection. Together, they give you a picture of what the largest investors in the world actually believe, not what they say in interviews, but what they've committed capital to. A few things to keep in mind. The 13F only shows long equity positions. It doesn't show short positions, options, or positions outside US listed stocks. It's a 45-day lag, so you're seeing where a fund was, not necessarily where they are right now. Use it as a research signal, not a trade trigger. Your homework this week: pick any fund manager you follow or respect. Pull their last 2 13F filings from EDGAR. Run prompt 1 and find their biggest position change from last quarter to this quarter. Then ask AI why that change might matter. Post what you find in the comments. There's usually something surprising in there. Subscribe if you haven't already, and I'll see you in the next one.